Hello, everybody. Today we're going to be starting directly with a technical analysis with some fundamentals. Now, just setting up the charts here. So, we're going to begin with the US dollar index, which has been, well, it moved in a downward trajectory yesterday following the ISM services figures coming out, which were lower than expected, hence providing an overall weakening of the greenback. Now, moving on to the common currency against the US dollar. So, on the daily, we've seen that the wick was not maintained, yet closed slightly higher, but it is currently moving in a downward trajectory on the daily. Now, coming into the 4 hour, we can see that it broke above our downward trend line. So, it moved higher, breaking R1, but failing to reach R2, and then broke down below R1 but is staying above our S1 figure. So, given that the Bollinger Bands are narrowing, it's implying reduced volatility within the market. Also, highlight the two bounces that we had mentioned broke above the 50 level but failed to move closer to 70, broke down below, and is now running along the RSI figure of 50, implying a sort of neutral market sentiment, including the narrowing of the Bollinger Bands, seem to validate our hypothesis. Hence, we now would hold a sideways bias for the pair. Now, the narrowing of the Bollinger Bands could provide some indication that this may move in a sideways fashion. Yet the fact that it has not yet touched following the break above and the break below down to S1 does not necessarily mean that it will be moving in a sideways fashion between these two boundaries. Yet it does appear to validate the resistance at R1 once again. Also note the wick break below, moved lower, yet failed to reach S1. So we could hypothetically narrow our sideways channel, yet this channel would be too narrow. It would imply that with a small movement, this could be easily broken. Hence, I would personally bring my sideways channel to S1 and R1, expecting this potentially to be formed. So I wouldn't be changing as of yet the support and resistance levels as they are continued to be validated by the price action. So personally, I would expect the the pair to move in a sideways direction. Now, fundamentally, we note that ECB President Christine Lagarde has been reiterating constantly the need for further rate hikes by the central bank in the future, which may provide some support for the euro. Yet, given that these comments are made frequently by multiple ECB policymakers, it appears that it has not had the desired impact, I would say, in terms of strengthening greatly the euro, as this is a frequent phenomenon from the ECB president. So we'd also note that it failed to break above 50. So this failure combined with the facts that we mentioned before, the Bollinger Bands narrowing, so less market volatility, failing to break above R1, I would have a sideways bias for the pair as the dollar has weakened, yet it appears that this is not evident in this pair, which may be not a sign of dollar strength, but of euro weakness. So if we move into the 30-minute time frame as well, provides a sort of clearer picture, I would say. Now, despite it breaking above 50, moving towards 30, it's still on the 4 hour chart moving in a sideways fashion. It's not as much. So this is due to their lower time frame, much more volatile. But I would personally expect to test S1, failing to break below and then move back towards R1, which would validate our sideways moving hypothesis. Yet, should it break below S1, we may see the next target for the bears being S2 at 1.0545, whereas should it break above R1, the next potential target might be at R2 at 1.0805. Now, the pound is an interesting story where one would have expected the pound to have strengthened against the dollar following yesterday's financial releases, yet it appears to have weakened on the daily. As you can see from here, it closed slightly lower than the open and is currently moving in a downwards fashion, testing our upwards moving trend line. Or should it break below, we would anticipate the potential for a move towards S2. So currently having S1, it has broken below the downwards moving trend line. And the RSI is failing to break above 50. As you can see, this was higher than 50, so it was a bullish sentiment, failing to break above R2, move lower to the mid-range of the Bollinger Band, but breaking below and moving below the downward trend line, despite correcting slightly higher. It has once again failed to break above R1 and the mid-range of the Bollinger Bands. Hence, I would hold a bearish outlook for the pair, given the prior break below and the current breaking of the upward trend line. But should this move higher, then I would reverse my outlook to a bullish outlook, as it will also break above the 50 figure. However, currently moving lower, potentially breaking below S1, with the next potential target for the bears being the S2 level. And then, excuse me, this should have been S3, whereas S2 would be at 1.2280. So should it break below S1, we would anticipate the next potential target being the S2 level at 1.2028, 228, excuse me. Moving on, the Japanese yen with the US dollar. Now, despite the BOJ governor's comments that the bank is not going to quickly move away from its ultra loose monetary policy, we have seen the yen strengthening on the anticipation that perhaps the government's um, report that was due to be released alongside the BOJ interest rate decision at the end of the month may hint a quote unquote easing of the ultra loose monetary policy, perhaps moving towards a more restrictive stance, hence, perhaps in the extreme scenario, raising interest rates. So we're seeing market sentiment slightly in favor of the yen. However, having broken below our sideways moving channel on one occasion and the second here, we now hold a bearish outlook. So S1 at, well, prior support at S1 139.65 will now turn to resistance. So this now is support turned resistance. So this becomes R1. R2 will be our previous R1 level, still validated, so it maintains its status as R2. And then prior R2 will now become R3. So the question now is, where do we bring our new support levels? So I would slightly bring perhaps S1 slightly higher, Now, this is very narrow. So, as you can see, the price action in the 4 hour chart could easily break below our S1. So, for us to maintain a bearish outlook, it would have to break below S1 and our S2 figure, which we will place in our chart once I'm finished with S1. So, once again, break above R1 for a bullish outlook, clear break above R1 and move towards R2, if not breaking also the R2 level. So for a bearish outlook to continue, we would anticipate the break below potential support at S1 at the 138.76 figure. S2 may be brought to the prior level that used to be our S2. So we're just fixing up our chart. Just placing back R3, 142.30. So that would be R3, as was mentioned before. S1 has been moved slightly higher. So our S2 will now be at 137.70. So this would be S2, and S3 would remain the same. So for our bearish outlook to continue, we would anticipate the break below S1 with the potential move or the potential target for the bears being the S2 level at 100 and excuse me 37.70. So, given the recent statements, we would have anticipated that the dollar would have gained against the yen. Yet, it appears that the market is anticipating some form of yen strengthening. Hence, the move below. Now, moving into the U.S. equities markets, note that the Dow Jones 30 has moved in a downward trajectory since yesterday. So, following the US ISM services PMI figure, it would appear with them coming in lower than anticipated. So, despite expanding, it comes at a slower rate, so about 50.4, which does not necessarily mean a contraction. Yet, the reduction, which was below the anticipated figure, may hint that the US services industry may be contracting in the near future, albeit it is not contracting as of yet, but the market sentiment appears to be moving in that direction with that in mind. So we hold the bearish outlook for the Dow Jones 30. As you can see, break below 70. So there is some bullish sentiment within the market still. However, the expansion of the Bollinger Bands implies high market volatility, such I would not be surprised if it broke below, which would potentially coincide with the reaching of the 50 RSI figure. And should it break below S1, I would anticipate a break, a move towards S2. So despite breaking above R1, the financial releases from yesterday appear to have reversed the pair's trajectory temporarily until it either breaks above R1 or moves towards S1. However, despite it being above 50, I would personally maintain a bearish outlook for the Dow Jones 30. The S&P 500, on the other hand, appears to be moving in a downwards fashion. As of earlier today, this was appeared to be moving in a relatively stable motion, yet it appears that it has now changed. So R1 having broken before, it will become S1, resistance now to support. Looking again, it would appear that it's moving still in an upwards fashion despite coming in lower than yesterday. And we can see the formation of an upwards moving trend line stemming from the 5th of April. So on the 4-hour, temporarily breaking below, yet correcting higher, validated before the move higher, 445 pips. So we now have resistance turn support. And given that, should the pair continue to validate our upwards moving trend line, we would maintain a bullish outlook for the S&P 500. So our S3 now is removed. As you can see, this is very volatile. So I would personally bring S2 slightly higher at 4,230. So this would be my new S2. Yet, please know that it could easily break within a few sessions S1 and S2. So in order to accommodate for a potential fluctuation in price action, I would bring my S3 at the 4,161 level. So this would be my S3. So this is S2. Yep, now this becomes S3. Perhaps S2 could be brought slightly lower. Our new S2, 4,219. Much better, providing some form for price action to move. So we now need to place our new R3. So given that we do not have price action to the left of our screen, that would mean we would have to go back and find prior support and resistance levels that have turned resistance. So R2 becomes R1, R3 becomes R2. And now we move backwards to find prior support, resistance. As you can see, our S2 is validated as well on numerous occasions, and S3 for a greater degree of support in terms of our support and resistance lines. And I would actually bring my new S3 around this level here, around 4,465. This would be my new R3 level. Now, please keep in mind that we have entered the FOMC's black period. Hence, we do not anticipate, well, they're not allowed to speak until the interest rate decision, which is due next week. Hence, excuse me, slight mistake, S3 becomes R3. So given that we're not going to be seeing any Fed members speaking up until the interest rate decision, the dollar well, may yield control to other currencies, even with the US equities markets, as a weaker dollar may facilitate um, more opportunities for foreign nationals buying stocks denominated in the US dollar. So the price action is slightly compacted, yet S1 at 4,260, S2 at 4,219, S3 at 4,161, and R1 4,325, R2 4,400, R3 4,465. Now, the Nasdaq 100 has been moving in an upward trajectory following the release of Apple's new augmented reality, virtual reality headset, which, albeit is quite expensive at 3,499 US dollars per set. So it's not necessarily that affordable for the average consumer, as it is quite pricey. Yet it does appear that the market is reacting favorably to the news by Apple. We also know that it's still remaining near the reading of 70, implying a strong bullish sentiment within the market. So resistance at R1 has now turned support, as we had noted in last week's technical analysis together. Broke below. This is S. This was our S1. Failed to break below S1. Broke below resistance. Now turned support at 14,465 and is moving higher. So we validated both resistance and support levels from last week. So this becomes S1. This becomes S2. And this becomes S3. So we maintain a bullish outlook for the Nasdaq 100, although it does appear that there was a formation of an upwards moving trend line, but it has been slightly broken. So for this to continue, I would anticipate a move higher from the upper trend line. So market correction higher, testing the upper Bollinger Band, breaking above the R2 level, which is now R1 at 14,775. So it becomes R1. This becomes R2. S3. And once again, in order to find previous level of resistance, we need to go back and we need to verify that this is correct. This may be more appealing, yet I would bring it around here, validate it. So this would be my new R3 at 15,590. But we should note that we believe that the AI hype behind the industry is quite overhyped. Hence, I would not be surprised if it moves in a downward trajectory. However, for now, it does appear to be moving in an upwards fashion. So this would be R1. We now have to slight Or my part. This needs to be fixed. $15,590. So it becomes R3. So let's fix our chart. R3, R2, R1. Currently moving in an upwards fashion, yet should it break a clear break below the upwards moving trend line and break below S1, then I would hold a bearish outlook for the Nasdaq 100. And moving on to oil. Now, oil is an interesting story. Considering the voluntary cuts by Saudi Arabia, it appears that the market deems these as insignificant in the grander picture of things, as the markets may be anticipating the potential for reduced demand, hence driving the liquid gold's price lower. Now, note, as we had mentioned before, the two bounces and the breaking above the 50, which coincided with right here the bullish outlook, yet failing to break above R3, currently testing R2, which is resistance now turns support. So this will now be moved as S1. So this becomes RS1. Now, despite it moving slightly lower, we maintain a bullish outlook. Should it fail to break below S1, it would potentially for us move higher. R1 becomes S2. Should it fail to break below S1, then we may see a testing resistance at R1 at 73.50, which was R3. However, should it make a clear break below S1, we may see it moving towards to test support at resistance turn support at S268.50. So that would mean our S1 will now become S3 at 66.15. Now, in terms of fundamentals, I would personally anticipate that the price of oil will move higher. I believe that this is a temporary move lower, despite breaking slightly below the 50 level. It has moved higher. It has failed to break above R1 at the 73.50, which is our new R1. So slight correction lower and then a move higher. Yet should it break below S1, as I said before, potential support at S2, with the next target being S3. This becomes R1. And once we're done placing our resistance levels, we will be looking for our we will be looking at our final pair, which will be the loonie. Now, the loonie is interesting given the fact that there's the interest rate decision by the BOC tomorrow. Before we get into that, R2 is at 75.66. Let's finish up with oil and then we'll move into the loonie. $5.66. And then R3 would come around 77.75. Should be my R3. So should we break above R1, the next potential target for the bulls is R2 at 75.66, where should the bullish momentum be maintained, we may see them testing at R3 77.75. And onto the last pair of the day, the loonie. So on the daily, we saw slight strengthening of the loonie, given yesterday's, well, despite yesterday's um, house sales. Excuse me, no, that is today. So those may provide an insight into the bank's interest rate decision tomorrow, where should they hike, we may see the loonie gaining, breaking below S1 at 1.34. You can see it's moving in a slightly sideways fashion, running along the RSI of 30. Now, despite being in a slightly sideways fashion, we do not maintain a sideways bias. We maintain a bearish bias for the pair, as it is still, as the RSI still indicates strong bearish sentiment within the market. So S3 becomes S2. R1 is brought lower. Well, R1 actually is maintained at 1.3665, as our previous S1 has now turned resistance. So support and resistance. This becomes R2, R3, R2 becomes R3. And traders may be looking to see at the bank's interest rate decision tomorrow. Should be interesting to hike or remain on hold. Personally, I would expect that the bank, should they remain on hold, they may provide a bearish forward guidance, potentially hinting at future rates, at increasing interest rates in the future. Whereas, should they hike, they may provide some sort of a dovish sentiment, where hinting that they may hike in the next meeting with another hike and then hold and then cut. That will be interesting, though, as nothing has been stated. This is personally my own hypothesis. So R3 would be at 1.32, well, 330. S3, excuse me. So loonie traders will be could be placing an emphasis on tomorrow's interest rate decision. 330. And let's just bring our chart back into view. So we maintain a bearish outlook for the pair, the dollar against the Canadian dollar, as the RSI figure is running along 30, hinting at a bearish sentiment within the market. In addition to moving lower, it is moving slightly lower. So for our bearish outlook to continue, we would like to see a clear break below S1 with the move towards potential resistance at S2. However, for a bullish outlook, we would like to see a clear break above R1 at 1.3545 with the move towards R2 at 1.3665. And once again, keep in mind R1 was support, now turned resistance. And I think that's it for today. Thank you, and until next time.
Everyone, my name is Emily. In today's session, we will look at news trading on economic releases. This trading strategy is appealing to many short-term forex traders. As markets move because of news, the release of economic data is often the most important catalyst for short-term movements. Basically, this trading strategy involves trading around significant forex news events, such as key economic releases from the countries whose national currencies consist of the major currency pairs. Because of the strong influence on a currency's valuation, a forex trader can take advantage of an important news release to potentially benefit from those fluctuations. There are 8 major currencies available for trading, so there is always a piece of economic data scheduled for release that forex traders can use to make informed trades. 7 or more pieces of data are released almost each weekday, except from holidays, from the 8 major most followed countries. Therefore, for traders who choose to trade news, there are lots of opportunities. As the US dollar is on the other side of 90% of all currency trades, US economic releases tend to have the most noticeable impact on forex markets. If you want to trade news successfully in the forex market, you need to know when reports are expected and understand which releases are most important under the economic conditions at the time. Generally, the most important information relates to changes in interest rates, inflation, and economic growth, like retail sales, manufacturing, and industrial production. To sum up, it's important to do your research and stay on top of economic news in order to reap the rewards. Thank you so much for watching us today, guys. Bye-bye.
Right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K. And then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K. And now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings more than 80 will indicate the price is near its high, and readings that are above 20, so readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had, where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case, we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we are looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Yeah, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel, a bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bound off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candlewick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support and resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel, and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for, gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Um, let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a negative reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 272 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see, is there any chance of divergence? No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. There's a Franken. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry. 100% for entry as well. Very nice triangles. Yep, that's about it for dollar cat. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. Cat yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep. So looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.